Hi guys, so here's a quick summary of what happened in the markets, that is from Thursday and Friday. So if you have noticed, I've been doing like a daily recap of the analysis that would have talked about in the previous day. So now I'm just going to combine Thursday and Friday, and we can take it from there as in regards to what should we be anticipating, especially tomorrow's price action. So this is going to be a recap, uh, let's just say, of the whole of last week, and then I'm going to do a small analysis uh, regarding Monday's price action, and then tomorrow that's when I'm going to send my weekly analysis video for you guys to use as a guide. So when we look in the markets, specifically, I'll be focusing on dollar, euro USD, pound USD, and the precious metal. So we can see last week, dollar index actually erased all the gains that it made during FOMC week. So these are the gains from FOMC week, which was 2 weeks ago. Then last week, all those gains, they were erased. So we literally saw a weaker dollar last week. But it shouldn't have come as a surprise, guys. With all the fundamentals that were on the calendar, with all the positive news that were coming from the other central banks, mainly Bank of England and ECB, it shouldn't have been a surprise. You see, this is where you as a trader now, you need to be in a position to anticipate certain moves in the market. You should have those reactionary skills whereby you should turn your analysis. Yes, we are higher time frame bullish on dollar index, but that doesn't mean that it should not go to the downside. And when that happens, you should be in a position to align yourself with the bias that is currently in the market. Now, we saw a very weak dollar last week. So that's 4 consecutive days of weakness since Monday's opening price action. That makes last week's Friday's candle crucial. That was a indecision. If you remember correctly, we highlighted that candle as indecision in the market, and that indecision was happening at a critical level in price structure, right? It happened at a critical level. And then we had Monday. Remember, I had emphasized that Monday's price action on dollar index, we are likely to see down close candle. And if we close below 96.88, then we are likely to see further drop to the downside. And that's exactly what happened. That's why I changed my mind on the short position that I mentioned in the group for Euro USD. I think 2 hours into that trade, I made a decision to say, no, I'm not going to hold this trade for long. I'm going to close it as soon as it turns blue. I think I got out with just 7 pips, which is not bad, considering that I had seen already that, okay, there's a turn in market structure here. I could see Euro USD reaccumulating liquidity from the downside for a further push to the upside. That's why I had to close that position. So with that said, with the weakness that we saw in DXY, we saw strength in Euro USD. Now, where did Euro USD rally to? This is the crucial part now. It rallied to this premium range of imbalance in the market. There's inefficiency here, and it actually filled the inefficiency. We had a stop hunt. We had a run off buy side liquidity here. Internal range. You can see we've got our external range buy side, external range sell side, internal range buy side liquidity right above dollar 14.80 was cleared. Friday's candle ran those stops. Now, this could also mean we are likely to see downside movement on Euro USD in the coming days. Probably Monday's price action is going to be a down candle, but I'm going to explain that just further down the line. So looking at Euro USD, it ran the internal range liquidity below $11. That was last week, Thursday, and then Friday we had indecision. Market was indecisive on where it wants to trade to. So these external range, they are still standing. This sell side liquidity, these ones have been ran. Now, once dollar closed below 96.88, then euro closed above $11.85. That was a clear sign of strength on the part of major currencies, namely pound USD, euro USD, NZD USD, and Aussie dollar. There was strength, underlying strength. Now remember, we looked at the bond market, the long-term interest rates. They signaled us weakness, right? They signaled weakness in the interest rate market, which in turn is also transposed to dollar index. And when there's weakness in the long-term interest rate market, dollar is not gonna rally that much. That means weakness was in dollar index. Now, euro USD, the moment it closed above $11.85, you as a trader should have been in a position to say that, okay, no, we've broken the market structure to the upside. So probably this was a run of liquidity, run of external range liquidity in the form of sell stops. So market now looks to trade to the upside, right? There was strength, underlying strength. $30 was your initial target, $30.60 your next target, and then ultimately $14, as I highlighted in those daily recap videos that you received. Now, with this rally, right, from discount range, you can clearly see we've got a discount. Price was rallying in discount. Now price has reached the premium range. What is it that we should anticipate in the coming week? Now we need Monday's price action. I'm going to do a short analysis quickly. Then finally coming to pound USD. Right, pound USD, there's a clear top-down analysis that is on the channel currently, and you've got access to it, where I explained that during Bank of England's rate decision, we're likely to see pound USD trade into this range here, right? And that's exactly what happened. This daily bearish order block, price rallied through it on Thursday and found resistance and dropped. Now you might say, but how did I know that price was gonna react like that? Now the rally on Thursday on pound USD was mainly instigated by the Bank of England raising the interest rates. Now when a country raises interest rates, guys, take note, when a country raises interest rates, that is going to have a huge impact on the yield market for that country. And when interest rates are increased, the yield is going to also increase. And when any yield for a country increases, it's going to attract investment, meaning the country's currency is going to gain value. Now, I anticipated reaccumulation, which happened when the PMIs for Great Britain came out, and then 2 o'clock we had the Bank of England rate decision, and there was a rally into the daily bearish order block. All right, so we had reaccumulation and long into the daily bearish order block, and that was the target, this area here. If you haven't watched my Wednesday's recap video, this area, I actually said price should trade into this range, seek liquidity. The draw on liquidity was inside this daily bearish order block, and that's exactly what happened. And then Friday we saw a market retracement. That is usual, that is understandable, that is normal case. Friday always sees a retracement after a huge rally during the whole of last week. So Friday we had a retracement to the downside. So that means this daily bearish order block here, this guy, provided resistance and we saw weakness, right? The weakness that we saw on pound USD and also on euro USD, you can see the wick here. I'm going to go to H4. This weakness that we saw, the resistance that was provided in the premium range on euro USD was facilitated by a good NFP number from the United States. The non-farm payroll number came out positive. That means we had resistance on pound USD, euro USD, and also NZD USD. Let me just open NZD USD quickly. So you can see NZD USD on Friday also, price found resistance inside this daily imbalance here. Price found resistance and it dropped to the downside. I think same applies also on AUD USD. If you go to the daily chart, you can see price did find resistance inside this level here. You see this imbalance here. We've got market inefficiency there. Price failed to continue the rally of the whole of last week, and then it dropped during NFP. So NFP was somewhere around, let me go to the hourly chart quickly. So Friday 7 o'clock there's NFP and then it dropped 41 pips. So this is how you have to now react to the market. Once you have analyzed a pair that you focus on, then intermarket analysis should be easy. You should know what positions to take on USD CAD. Once there's a positive NFP number, once there's a negative NFP number, you should know USD CAD, USD CHF, they all rallied to the upside on Friday. Let's see, let me go to USD CHF. I'm gonna go to USD CHF. This was a very interesting pair. I managed to trade from Tuesday. I had a nice shot to the downside. I think I got almost like 60 pips in there because price was trading away from a daily bearish order block. So on Friday we saw a rally after a positive NFP number. We saw a rally to the upside. So because of the NFP number, we saw a retracement in the majors that were rallying to the upside. They found resistance, most probably in premium range, in premium arrays, and in the majors that have got USD as the base currency. Those currencies, they managed to rally to the upside after NFP release. So looking ahead now to Monday's price action, I'm only going to talk about Monday's price action, and then the weekly forecast. That one I'm going to upload it once I have seen how Monday has traded, because that's going to give us a guideline on how to approach Tuesday, Wednesday, and Thursday. So I'm just going to look at the calendar quickly so that I've got a bit of an understanding of how we should anticipate Monday's range. ECB not sees first interest rate hike in fourth quarter of 2022. You see, this is crucial. ECB is not sees first interest rate hike in fourth quarter of 2022. So expect euro to trade weaker this year up until the fourth quarter. Remember, Fed, they're anticipating a rate increase in March. On their March FOMC date, I think it's 16 March, they're expected to rise, to increase the rates, and that's gonna boost the dollar index. So expect weakness in euro this year. So looking ahead to Monday, right? On the calendar for Monday, we do not have that much. There isn't much on the calendar except for the retail sales for Australia. They're coming out 2:30 in the morning. And then what else do we have that can be of interest? There's nothing much of interest tomorrow on the calendar. So that gives more emphasis now to you to be in a position to wait for the price action for Monday to pan out before you make any decision. You see, you don't want to make a decision without understanding what the institutionals are doing. So I'm just going to look at the how the bond market traded also on for last week. So that means going to the technical chart. So I'm going to look at the 30-year bond yield. I'm going to look at the 10-year yield, and then I'll also look at the 5-year. So I'm just going to compare their price action from last week. Now remember what I said, guys. The dollar index always reacts to what the interest rate market is saying, and right now the main driver in the market is the interest rates. We cannot dispute that the interest rates are driving the markets. So we've got 30-year, we've got 5-year, we've got let me just hide these marks here. So I'm gonna have the 5-year here. I just want to see, because I can already see the 30-year yield rallied Friday and Thursday. Thursday and Friday there was a rally in. Same applies with 5-year. You can see here they've erased the weakness, and then so this is, I have to put the 10-year here. So you see, guys, this is me. This is what I normally do, not on a daily basis, but yeah, once in a while I will do it on a daily basis just to see how the market is trading. Now you can see here what we've got. Both, not just both, three of them, they're in tandem, right? Unlike the previous week. Remember the weakness that we are seeing right now in weakness that we saw on dollar. It was because of this price action here. See, there was SMT divergency in the interest rate markets. That's why we saw weakness in dollar last week. We had SMT divergency on the interest rate market. But now that we are seeing strength coming back, look at the 10-year. The 10-year is right now almost approaching the 2.0 price point. This is crucial. This is strength, guys, in the interest rate market. That's strength. Now, when we look at this as potential strength coming into dollar, where do we anticipate dollar to trade to? Right? Let's say Monday, for example. Let's talk of Monday. Right now, dollar has found support inside this imbalance here. Dollar has found support at 95,100 and is trying to break to the upside. Now, when you look closely on this daily chart, there's imbalance here. Friday's high and Wednesday's low. There's imbalance in price structure, and you expect dollar to fill up that imbalance on Monday. That means I'm expecting Monday's price action to be a bullish candle to the upside on dollar index. Vice versa, I'll be expecting a bearish down close day on Monday on Euro USD. My draw on liquidity on Euro USD is inside this imbalance here. This is where my draw on liquidity on Monday is. So I would like to see Monday's price action trade into this highlighted range on Euro USD. And then when I come to dollar index, I'm just going to highlight this. I want dollar to trade inside this range here. And on Euro USD, I want dollar to trade to $14.041. I'm expecting a down close candle. And if that does not happen, right, then Tuesday we are likely to see drop in Euro USD and further rally on dollar index on Tuesday. So the draw on liquidity is inside these imbalance zones that I've highlighted. Now I'm also going to look at dollar index, pound USD, and Euro USD. Already I have come to the conclusion that there's strength in the interest rate markets, and it's going to be transposed to the dollar. So expect strength in dollar. Now I'm gonna go back to investing.com. So I'm gonna have GBP USD here. The reason why I use investing.com, guys, is easy for me to highlight SMT divergency using investing.com because their side by side chart analysis is quite powerful, right? So this is pound USD daily chart, this is euro USD daily chart, right? And this is dollar index daily chart. Already you see your technical skills, technical analysis skills, already you should see pound USD failed to make a higher high at a time when euro USD at a higher high and dollar index made a lower low. We should have seen a higher high in pound USD, but that did not happen. Why? You see, that's why what you have to ask yourself, why didn't that happen? You can see here euro USD higher high, euro USD is in tandem with dollar index. That's the price action. So we're supposed to see a high in euro in pound USD. There was supposed to be a higher high, but that did not happen. Now, what does this tell us in terms of technical analysis? SMT divergency. Pound USD is distributing to the downside. Price returned to fair value. Fair value in the form of what? This down close candle here, bearish order block. Euro USD is distributing. Pound USD is redistributing. It has already run stops and then it returned to fair value. You see, then Euro USD is distributing. Distributing where? Inside this daily bearish order block. Now remember, Friday's high ran stops on Euro USD. Means these two equal highs up here, buy stops above, were violated. They were liquidated. Then when you look at dollar index is accumulating, right? Dollar index is accumulating here. Accumulating where? Inside this imbalance here. Prices filled this imbalance. Now it's rallying, going to the upside. You see, so this is a potential accumulation phase on dollar index. Now, for us to be sure of that, we need Monday's price action. The moment we see Monday's price action open, reaccumulates and then trade above and close, most probably above Friday's high, or even just trade above and close below. That's what we want to see. You see, we need to have a candle that's going to open, reaccumulate, trades above Friday's high, then close. Whether it closes above Friday's high or not, but we need to see it trading above Friday's high. Then we will be definite that this was accumulation, right? We'll be definite that Friday's candle was accumulation in dollar index. That's why Monday reaccumulated for a further push to the upside. Because now, this is where you now have to link it now with the interest rates. You see, this intermarket analysis, which I've just done here. I've done intermarket analysis. I've looked at the long-term interest rates, 30-year, 5-year, and 10-year, and I saw that there is strength in the interest rate markets, right? And now I look at the major currencies that I trade: dollar, euro USD, and pound USD. Pound USD is showing me that there's weakness coming into pound USD, and euro USD is showing me also there's weakness, potential distribution, but we need Monday's price action. The same thing that we need on dollar index reaccumulation, we need to see the same thing here on pound USD. We need to see Monday's candle on euro USD. Sorry, we need to see Monday's candle. Let me see if I can draw that much better, guys. So we need to see Monday's candle to be like something like this. That's the same thing that we should anticipate. Monday's candle on Euro USD should not trade above Friday's high. Monday's candle on dollar index should not trade above Friday's low. So we're expecting the candle to open here, trade lower, and then trade to the upside. You see, it must trade above Friday's high on dollar index. On Euro USD, that candle must trade below Friday's low. That's gonna give us clear, definitive weakness in Euro USD and strength that is being signaled in the long-term interest rate markets on the strength that we are seeing in the long-term interest rate markets. So as for pound USD on Monday, I'm expecting it to open right here, then trade and fill up this imbalance here. You see, this will be Monday's, something like this on pound USD. I'm expecting a bearish candle here to trade into this imbalance here. The draw on liquidity on pound USD is to the downside. So I would like to see Monday's price action trade below Friday's low on pound USD. Now I'm gonna go to the chart quickly, mainly pound USD. So pound USD, you can see where the imbalance is. So this is pound USD. This is the imbalance on pound USD. So I'm expecting price to at least trade below 1.3481. That's the draw on liquidity, the mean threshold of this imbalance here. But that might not happen on Monday, but we should see price at least try to be drawn to that price point. So yeah, that's pretty much about it, guys. The main weekly mentorship video, I'll post it tomorrow just before market close, but already you should have something that you can work with on Monday, what to look out for in terms of directional bias. Don't just jump into the markets on Monday before you understand what to do. You see, you need to actually know what you're doing for you to be trading on Monday. So yeah, that's pretty much about it for this weekly recap and a short review of what to anticipate on Monday. So yeah, I wish you guys good luck and happy trading. Thank you.